It used to take 2 to 3 days. Now it takes 4 to 8 weeks. And it's not just from the Bank of England vaults. Evidently, it's from all sorts of vaults all throughout the LBMA network. And what it tells you is that they don't have the gold to make deliveries. It's not taking that long to refine them. It means if they have to refine them, they don't have the gold. And that means the gold that they show that they have is not for sale. No one's getting rid of it. And if they don't have the gold, how close are we to some sort of an event where, I think in London, the numbers that if I remember, David Jensen talked about, they trade twice global annual mine supply per day, every day. In silver, it's 3.5 times annual global mine supply per day. And to his numbers, 90+% of all of these trades are paper naked trades. Now, the theory is that everyone's worried about a 10% import tariff on gold, and more so than silver. The argument against silver is that we're in a supply deficit here in the States, so he won't do it because he has to import it. Don't know if that's true or not, but it would make sense. With gold, on the other hand, you have, I don't know, I haven't looked lately. There's a guy on Twitter that does a great job of showing the rehypothecation of gold, but it was always in the neighborhood of 1,500% or higher. I mean, that's just conservative. It's probably much higher than that. But that means that the contracts are sold over and over and over and over and over again. 15 people have the same contract thinking they have their own contract is what that would basically mean. And cash settlement is very, very close at that rate. I was talking to a guy the other day at dinner in my community, and he is involved in aluminum and had a force majeure moment where his manufacturing business needs lots of aluminum, had contracts they couldn't deliver, they cash settled. It's force majeure. That's what we're setting up for here. And these players are saying, man, I got all these contracts. And when you have a contract, if I go short and you go long, well, most people just cash settle. Most people like Miles Franklin, 2 bottles of water here. This is 5,000 ounces of gold in my warehouse, 5,000 on COMEX. I sell here. I own physically here. If the price in my warehouse drops by $100, I'm down $500,000 in gold, but I went up 500,000 on what I sold short. I'm not looking to take delivery. I have it covered. A lot of the people are just speculating the way they do in buying stocks or going to the casino, and others are manipulating the market. And they manipulate it by naked shorting because they got massive, massive checkbooks. And maybe they're even being told by the Western elite, go ahead and do this for us, would you? Thank you. And by doing such, remember, you as the long have the right to say, no. I'll stand for delivery, thank you. And that's what we saw in January. Massive deliveries, right? So what if everyone says, I see you guys are screwed. Delivery, please. Now, isn't that what the Hunt brothers did? Sure is. Hunt brothers saw the same exact things, and the exchange changed the rules on them. Said you can go long just 1 million contracts or so. You can go short as much as you want. Please, thank you. I mean, stupidity. But the point of it is that, yes, that is the rumor. But I would look much past that and say what you see are these claims, these promises of delivery in London. You got a whole big vault full of IOUs and a little bit of gold. And I've been saying forever, and maybe this is it. You know, the little boy who cried wolf, here I am. One of these days, wolf will coming, and maybe this is it. Maybe they all say, we got him cornered, y'all. Let's stand for delivery and watch what happens. And that's what they're doing. They're getting it home preemptively in case there are tariffs because they know they cannot come up with the gold. But lo and behold, having the same problem in London with these delivery delays. So, you know, you can only manipulate a market over a very long period of time by pushing it in the direction that it is going. They are trying to hold back the global demand of powers that are as challenging as us, especially when you combine them all together. Their coordination, their motivation, their sophistication, and their wealth have all gone parabolically higher over the past 2 decades. And now I think they're enjoying watching us kind of squirm on this. And no, if they wanted to, they could turn up the heat just like that. But they've been playing the long game so they can get as much as they can. If they turned up the heat that fast, it would have been force majeure a long time ago. The rules would have been changed. So let's beat them at our own game, they're thinking. Do it as long as we can until we have to pull the switch. And then things get very frightening in my mind. And that's the beginning of a reset. One of these big banks, the Western banks, fails to deliver, creates a daisy chain of defaults and of forfeitures and bankruptcies and counterparty risk and credit default swaps and bringing in AIG into the moment again. And boom, that's how it happens, because they don't just own gold. Remember, these banks have a lot of fingers and a lot of pies all around the globe, and they're all incestuously tied together. So, yeah, I mean, I don't want to over dramatize it, but that is ultimately, I think, something you could see happen if the powers that be on the other side of the table really wanted to turn up the heat. Well, I mean, with Trump in office, we can, demand for platinum has been relatively stable, if not decreasing, with the electric vehicle craze. They're projected to see a slight increase maybe in platinum mining or production, but the thing of it is almost all of it is made in or produced in South Africa and in Russia. Staying with Trump and saying, we're not going to get rid of the combustion engine anytime soon. You need platinum for its catalytic converter uses. The thing about it is that they used to be the primary catalyst or catalytic converter, or I guess you call it a catalyst. You're the what's it called? What were you in your previous life?
Physicist,
engineer.
And manufacturing.
So
engineer,
it's called a catalyst, right? Is that what it would be?
Yeah. Mm-hmm.
Okay,
yeah.
So it is the primary catalyst. Used to be primary catalyst for unleaded vehicles. It's now the primary catalyst for diesel vehicles, because when palladium was so much cheaper and has similar properties, they retrofitted everything. Maybe they'll go back to that. The argument is sound, right? I mean, the argument is very sound that it's way out of whack. It is. It is way out of whack, totally. And you got banks like UBS that are forecasting large deficits between supply and demand. In fact, they're saying as much as 500,000 ounces could be, a continued shortage, that much, and it'd be the third consecutive year. So it hasn't been huge, but they're saying it could be higher. To me, I think you should own it. If you own a significant precious metals portfolio, it's third in line for me behind silver and gold, but it's a sound argument. The biggest issue in the retail side of things is that I had two very large orders at the beginning of the year for platinum, 500 ounces each order, two of them. And when I called the trading desk, they said, it's a good thing you called when this is January 1, 2, 3, 4, real early in the year. And well, we're getting our allocations right now and stuff's getting real hard to get. And so most of the mints have already sent out their allocations or large portions of it. Typically, let me ask you a question. Typically, in an interview like this that we do, how many people view it typically in over the, like if you look back at it next month?
About 30 to 50,000.
Okay, so this is what I was getting at. United States mint production for non-proof bullion, American Platinum Eagle coins, has varied over the years. In 2023, the mint produced 12,700 1-ounce bullion Platinum Eagles. So, 1 out of 4 people watching this video over the next month could buy one platinum coin last year in 2023. The 2024 numbers haven't been released yet, but the point of it is that the mints make them in tiny supplies, so they're hard to come by. They sell out fast, and the same thing is true with the UK, with the Perth, with the Austrian mint and the Canadian mint. They don't make many. They're hard to come by. They're worth owning some, and if you believe in anomalies, in historical anomalies, price ratio, etc., it's a hell of a buy. One of the crazy things that is hard for people to deal with, and they dismiss so much of what they believed at one point is because logic and mathematics, and they've had a kind of a counterbalance or a counter. They haven't been, logic has been contrary to outcome for quite some time. And what's the old saying? The market can stay irrational longer than one can stay solvent. But yes, I like it. It's a good value, but you're going to pay higher premiums than you would like, higher premiums than you would pay in gold and silver in terms of comparatively right now, because the U.S. Mint will make 100 times the amount of gold eagles that they did platinum eagles in a year. If not, well, they'll make well over 1 million of them in 1 ounce plus half quarter and 10th ounce. They don't, since 2008, the U.S. Mint has not made any fractional platinum eagles to my knowledge. And in 2008 was the last year really that I remember getting platinum eagles with any ease. So like it, but maybe tread a little lightly on how much you add to your portfolio.